Hello, I'm Ryan from Chelsea Financial Services. Today, we're joined by Richard Penny, manager of the CRUX UK Special Situations Fund. Richard, thank you very much for your time today.
Thank you.
Now, you tend to invest in growth businesses with low debt, but at the right price. You must have picked up quite a few bargains in the recent months.
Yeah, I mean, obviously the markets have hit recent lows. And actually, that was an opportunity to buy some names that we'd had before at much higher prices, and also to top up on some of the companies that are in the portfolio. So in terms of the ones that we'd had before, Whitbread, we think we'd sold that about close to £50 over a year ago. We were able to pick those up under £20. Similarly, Melrose, which I think is a very well-managed industrial conglomerate, we sold those over £2.20, and we were able to pick those up for under £1. We're also adding to names like Brewin Dolphin and Franchise Brands, one of our smaller companies.
And generally, your portfolio is split into two buckets, one that you call sort of the rising stars, another the fallen angels. Can you explain these terms to us and maybe give an example or two for each?
Yeah, of course. So the basic premise is we're trying to make capital gains over the long term. And there's two basic ways to doing that, which is to buy companies that are improving that we can buy at the right price. Often companies that are growing are at a very high price and we can't make money in those. But often the rising stars will be the smaller businesses that are very reasonably priced, that got many years of growth ahead of them. So names that I particularly like there, company Inspired Energy, which has been growing very strongly. It's got very nice returns. It's been growing at 7 to 8% revenue line, but that should accelerate. What it does is it helps companies, corporate entities, buy power, and that company is available for about 10 times this year's profits. Now, other similar companies with those growth trajectories will trade a lot higher than that. Another rising star I like, a company called Maxite, is a beneficiary of a major trend in drug discovery, so-called gene therapy. This is really, really buoyant, really sort of heavily invested area in the US. It's sitting in the UK market and in the small and micro cap space. And it has an instrument which helps these companies do this gene therapy. And it's been relatively undiscovered. It's been performing recently, but it's announced that it will go on to the US NASDAQ listing next year. And it's also seeking partners for a drug therapeutic program called Karma, which I think is also another catalyst for what potentially could be a good uplift in value. In terms of the fallen angels, these are probably more taking a long-term view, looking at companies that have been really good over 10, 15 years. And then maybe just, we've obviously had a downturn in the economy, which could go on for a year and a half. And it's then maybe picking up those kind of companies now, taking that long-term view. And basically I'm using the benefit of hindsight I had in 1998 and 2008, when we did very well buying these kind of companies. Often these could be larger companies, and I mentioned Whitbread before, that would be one that basically has a return on capital of over 10% and it grows at 5 to 8%. It's a cyclical business, but when it comes out of the cycles, it will take market share, and that should mean that the share price should be good. Melrose, similarly, one of the more capable management teams in the UK. The management team I will back, albeit in difficult circumstances, to improve the assets they've got. And I believe they'll also sell some of the businesses. So I think that will, that's an opportunity to get involved with that business on a sort of fallen angel type basis. Mm.
And you mentioned about sort of the smaller companies there, and you're quite heavily invested in those sort of small and medium-sized companies. How have they been performing generally recently? What areas have done well? What areas sort of haven't really?
Yeah, so the fund is 70% in small and mid-sized companies. So that would be 70% in companies under about £4 billion. But we also have a lot in the kind of micro-cap area. And a particular focus for me is life sciences and technology. So we have 30% in that area. How have they been doing? Well, these companies obviously didn't do very well in the downturn in March and April, but quite a lot of them have recovered incredibly strongly. And some of those, we're taking profits where they've done well, but other names still waiting to be discovered, and some are trading down at incredibly low prices. So generally, I think they're doing pretty well. They've recovered pretty well, and actually, there's quite a bit of interest in this area, more so than I've seen in perhaps the last couple of years, which is a bit surprising, really.
Yeah, especially. I mean, we'll touch on sort of Brexit later, but I imagine that's sort of having an effect on those companies as well. But actually, I was going to go back to sort of their listing. Actually, one of the sort of things that you do that others perhaps don't is investing in AIM-listed companies. It's a part of the market that can be very difficult to get right. How do you know when an opportunity is good?
Well, of course, we don't get them all right, but over about 25 years, I've got it right more often than not, I would say, or at least that's what the performance tables say. How do we get it right? Well, I would say I see about a company a day. So we meet a lot of these companies. We have met a lot of them. I've probably had about 4,000 or 5,000 meetings with these AIM companies. Many of them would be with the same company multiple times. And I specialize. So I specialize in the sort of growth sectors, so life sciences, healthcare, and then sort of technology, which is software companies and IT hardware companies. And by specializing in these, you can pick up on themes and trends that may be going on overseas in the US, where these things are very highly valued, and find something that's a bit of a sort of undiscovered gem in the UK.
And then zooming out a little bit, what is your outlook generally for UK equities for the rest of this year? Obviously had a very tumultuous first half of the year. So what's your outcome for the rest of it? Do you think Brexit is going to weigh on investors' minds?
Yeah, so, I mean, it's the difficulty at the minute is, of course, is that we don't really know what the real earnings level is going to be. So it's probably not going to return to last year's earnings for 2 or 3 years in many cases. And then, of course, this year's earnings will be way lower than you would expect the new normal to be. So our approach to that is look at the 10-year average of profits, the so-called cyclically adjusted PE or the Schiller PE. So this is a pretty good long-term indicator. And when we've been at the level we're at today, actually people have had double-digit returns for 15 years. So that's the UK. Now, that doesn't guarantee that we wouldn't go lower, but it does say that if you're happy to take your money and put it away for a few years, which I think most people are, it is a market to buy. With regard to Brexit, we don't really know what's going to happen. I would say it's become less of an issue. And there's 2 issues for that. Obviously, we've had a downturn and people are worrying about that. But also, the main way that it influences the UK is in the weakness of the pound, typically against the dollar, where there's a lot of dollar-earning companies. We've actually seen a weak dollar recently and political uncertainty in the US around the elections there. So that's meant that it hasn't just been about the UK political situation, it's been about the US as well, and how their economy is faring. And the most important thing about Brexit is that since the referendum in 2016, the UK has underperformed markedly. And that's also because people and institutions, the people that own most of these stocks, have disinvested. So any resolution, we could see those people come back, and there is a big differential against rest of the world equities where the UK would play catch up.
Richard, that's been absolutely brilliant. Thank you very much for your time today. And if you'd like to find out more about the CRUX UK Special Situations Fund, please visit the website, chelseafs.co.uk. And for more of our content and videos, please subscribe below.